Hello everyone, and welcome back to Dr. Tao's Quant Lab. Today we are diving into subsection 1.7.2, where we look under the hood of a company's actual business operations. If you want to find the fundamental value of a stock, you must know how to read a financial report. These are formal, regulated records published quarterly and annually. A quick note before we begin. Always check the dates. A company's fiscal year, or FY, does not always match the calendar year. For example, NVIDIA's fiscal year 2026 actually covers the calendar year of 2025 and early 2026. Before we look at the numbers, you need to know where to find them. The absolute best, fastest place to get these reports is the company's investor relations website. You can literally just go to Google and type in NVIDIA Investor Relations or Apple Investor Relations. There, you will find their price releases, earnings slides, and the exact summary tables we are about to look at. You can also use the SEC Edgar database for official 10K fillings, or look at your trading platform like Momo or Yahoo Finance for quick data. For active traders trying to estimate a stock price, the most important document is the income statement. To show you exactly how this works, I have put up NVIDIA's Q4 fiscal 2026 summary right from their investor relationship page. This report is incredibly recent. It was just published 2 days ago. So we are looking at the absolute freshest data available. Before we read the rows, I want to point out a standard accounting rule that often confuses beginners. When you read financial reports, any number enclosed in parentheses indicates a negative value, a loss, or a decrease. It is not in this table, but you may find in some other financial reports. Now, let's read this statement from top to bottom. At the very top, we have revenue, which is universally called the top line. This is the total money brought in by sales. You can see NVIDIA brought in a massive 68.1 billion this quarter. Note that all numbers are in millions. Next, we subtract the direct cost of making the product, which leaves us with the gross margin. This is a critical metric. It tells you the percentage of revenue the company actually keeps after manufacturing. Here, NVIDIA's gross margin is incredibly strong at 75%. Next, we subtract operating expenses, or OPEX. These are the day-to-day cost of running the business, like R&D and employee salaries. That leaves us the operating income, the profit from the core business alone. Finally, after taking out taxes and interest, we reach net income. I also summarize all of this right here. Now I want to make a very important clarification. Look closely at the image. You will notice that earning per share is printed physically at the bottom of the table. However, in the finance and accounting world, net income is universally known as the bottom line. Why? Because net income is the final result of all company operations. Earnings per share is simply a derived metric calculated after the fact. You will also notice the report is split into two sections, GAAP and non-GAAP. GAAP numbers follow strict, legally standardized accounting rules. Non-GAAP numbers are adjusted by management to exclude so-called one-time expenses. To be safe, conservative, and reliable, I always based my valuations on the strict GAAP numbers. Now, let's look at final row, diluted earning per share, or EPS. EPS is the engine that drives stock prices. It takes that total net income and divide this evenly across every single share of stock. When you buy one share, the EPS tells you exactly how much actual profit that one share generated. Always use the diluted because it assumes all employees' stock options have been exercised, giving you the most conservative share count. Finally, look at the two columns on the far right, QQ and YY. Financial numbers are meaningless unless you compare them to the past. QQ stands for quarter over quarter. It compares this quarter to the immediately preceding quarter to show short-term momentum. YY stands for year over year. It compares this quarter to the exact same quarter last year. This is vital because it eliminates seasonal biases, like holiday shopping spike. As you can see, NVIDIA's revenue grow 73% year over year. Now that you know where to find the report, how to extract the EPS, and how to reading the growth rates, we are going to use these exact numbers in the next video to mathematically calculate NVIDIA's reasonable price range for the coming year. Thank you for watching, and I will see you in the next video.